Imagine this. You've had a solid week at work, feeling good about your progress, and you decide to check your investment account, only to see it's down 10%. Ouch. Your heart skips a beat and you wonder, what is happening? You're not alone. The market's been on a roller coaster and it's got a lot of people uneasy. But here's the scoop. Some investors are not only calm, they're actually seeing opportunities. First up, let's dive into what's driving this downturn. It's not just one thing. We're talking about interest rates creeping up, inflation worries, and some global tensions that seem to be on the rise. Remember how the Federal Reserve raised interest rates again last month? Yeah, that's a biggie. Higher rates can make borrowing more expensive, which means businesses might slow down on expansion and hiring. It's like a domino effect in the economy, and investors are taking notice. Now here's a jaw-dropper. Did you know that during the last decade, the S&P 500 had an average correction, or a drop of 10% or more, every 1.6 years? And yet, it still averaged an annual return of around 10%. That's the nature of the game. A bit of turbulence here and there, but over time, the numbers tend to climb. So, what are smart investors doing while the market's wobbling? First, they're focusing on the basics. Think of them like skilled pilots facing turbulence. They're keeping a steady hand on the controls and sticking to their flight plan. One effective strategy is dollar cost averaging. Say you invest $200 every month into your favorite index fund, no matter if prices are up or down. By doing so, you're buying more shares when prices are low and fewer when they're high. Over time, this smooths out the bumps and helps you avoid the stress of trying to time the market. Let's chat about another tactic: diversification. You've probably heard the saying, "Don't put all your eggs in one basket." Well, that's pretty much gospel for investors. If your portfolio is as varied as a buffet, a mix of stocks, bonds, and maybe some real estate, then a dip in one area might not hit you as hard. During the 2008 financial crisis, those who had a diverse portfolio often fared better than those heavily invested in just one sector. And here's where it gets interesting. Some savvy investors see these downturns as shopping opportunities. Imagine going into your favorite store and finding everything at a discount. That's how Warren Buffett views the market during a dip. He once said, "Be fearful when others are greedy, and greedy when others are fearful." When prices drop, it's a chance to grab quality stocks at lower prices. But, and this is crucial, this strategy works best if you're in it for the long haul and you've got some solid research behind your picks. You might also be surprised to learn that some investors use downturns to bolster their emergency funds. It's a bit like reinforcing your defenses when a storm is coming. If you've got cash on hand, you won't need to sell off investments at a loss to cover unexpected expenses. Plus, it gives you the flexibility to jump on those investment opportunities when they arise. And speaking of opportunities, let's talk about dividends. Even when stock prices falter, companies still often pay out dividends. It's like a little bonus for sticking with them through thick and thin. Reinvesting those dividends can help grow your investment even if the market's in a funk. In fact, some studies show that reinvested dividends account for a significant portion of stock market returns over the long term. Now, some of you might be thinking, should I sell everything and run for the hills? But here's the thing. More often than not, selling in a panic locks in your losses. During the financial crisis of 2008, the market plunged, but by 2013, it had fully recovered and then some. Those who stayed invested reaped the rewards, while those who pulled out missed a significant rebound. So what should you do right now? Take a deep breath and consider opening a high-yield savings account if you haven't already. Marcus by Goldman Sachs is offering 4.75% right now, which is way better than the 0.01% from some other banks. It takes only 5 minutes to set up with zero fees. Having a bit of cash earning interest can make you feel a lot more secure when the market's on a bumpy ride. Remember, the stock market has its ups and downs, just like life. But with some smart strategies and